Okay, so this video is all going to be about a dealing range. Okay, this is a topic I don't talk about very often, but it is something worth discussing because you can trade quite comfortably off of a dealing range just by observing price action. And I'm going to give you tips and tell you how I utilize that kind of um, information within a dealing range that could help us get into a few trades, a little bit like this, right? Um, so, what is a dealing range? Would be the first question we need to ask, right? And quite honestly, a dealing range is literally just a range in where price is transacting. So, right now, I've identified a dealing range from this high point here down to this low point here. And the reason I'm able to use these two as the dealing range, this is the low point. This one's fairly obvious because this is where we've stopped, moved forward, broken some form of structure. Okay. And it wasn't until I look at what we've mitigated down here after that breaking structure, which is when I can sort of come to conclude that this is the dealing range high. Now, why is this the high? It's because it is a primary range. Let's label that. It's a primary range. And what's a primary range? A primary range is a range that's gone over a range that had liquidity and a break of structure, right? So here was that very small. I'm on a 15-second chart. But here's a range, an initiation, and let's find the break of structure. We could use this low. I don't think it penetrated this one, but this low is absolutely valid, especially for a small range. So you've got range, initiation, break of structure. What that does is it adds money into this area above it because anyone trading small, especially, or algorithms or whatever, they might put their stops here. So it's like as we break structure, automatic stop placements go in. This one comes in over the liquidity and initiates a wave. This was the last time this happened between here and here. And so now we're caught within this, what I'm calling a dealing range, right? Which is literally just a range where they can transact price. Maybe this is being offered to multiple clients. Maybe this is just all algorithmic. Whatever the case may be, what I'm seeing is that in these dealing ranges, most likely the range that I should say the high or the low that has had the biggest reaction, wrong way of saying it, that will have or has the potential for the biggest reaction will win. That's a better way of saying it, but still not correct, right? So let's try to sort of explain this. So within this dealing range, if we look left, what did we mitigate at the dealing range, right? At the very high of this primary range, right? The primary range formed and pushed down. So we know we've got a primary down to a low here, right? So primary range down to a low here. So first thing we want to do is as soon as we get that break in structure here, we want to be looking at what the heck did we mitigate? What's caused a break in structure here? I mean, this isn't much of structure, admittedly, it's 15 seconds, but this is showing up on a minute. Um, and so this is where we would want to examine. Now, this in here might look like a primary, a range, initiation, break of structure comes in over the top and breaks out the structure, but this actually did not qualify. Okay, this range right here was formed during slash after, right? This breaking structure. So that's why this is not a primary. So anyway, back to what I was talking about. What did this mitigate? And so we literally would sort of step out of our time frame a little bit. I'm on a 2 minute chart right now. I've got buy primary right below us, major, and so I sort of examine what this is, right? So I push through this bar because it's all just a very quick transacting. Same here, just push through here, and you can see that we get hung up here. This is where price is holding. So let's have a little look at what it was. Well, we can see that this was a range that kind of went like this, right? So it would be a buy primary. if it can activate on itself. So all of this, we could argue that this was range initiation, another range initiation, and then we had the break-in structure up here, right? So we can absolutely say that this is a primary range, with the exception of what? It doesn't activate through breaks of structure. So let's see here. You see, this would be the break of structure. We need the primary to activate for it to be a legitimate primary range, right? So all I'm seeing is it's come into a primary range that couldn't activate. And so that's what I wrote. It's a transitional order block by primary that couldn't activate. So in my eyes, that's weak. Weaker than the alternative. So let's go look at the alternative. Let's go back. So we've got to start, we've got this transitional order block right here that couldn't activate. And then on this high right here, what have we got? It's a transitional order block by primary is what I've written. So let's see. So I've got this arrow that starts here, but realistically it starts right here, okay? Right where I've written primary. So let's just look left, and then boom, we run into something. What have we ran into? Price action. What is it? Last known range by the looks of things. It's a by primary, right? Why is that by primary? There's a range. There's your break-in structure. Range, initiation, break-in structure. This is the part of the transacting, the part of price that came up and over that liquidity and broke on itself and broke major structure. Okay, so this is an activated by primary. Yes, price has flooded through it. Okay, so we've gotten a buy primary and we've basically handed off to a sell primary, right? And it's for that reason I think that adds a lot more weight too, because this is like it's a changing of the guards, right? We're changing from one guard to a different guard, a buy primary guard into a sell primary guard. And so now, as we look at our dealing range, whatever that really is, right? We can then say, well, we've got our A leg has mitigated a buy primary, and our B leg has mitigated a buy primary that couldn't activate. So which one is stronger? The activation. Obviously, the activated one is stronger, so we conclude that this high should hold. And what do we conclude about this high? It should not hold. Right? Within this dealing range. So, does that mean that market makers cannot, do not, will not accept random orders? Like, for example, we're ranging in here, right? So we're expecting price to transact in here. Are we saying now then that banks and financial institutions have absolutely no part to play whether we're going to break up above this level or not? And I'm here to guess and tell you that I actually think yes, that is correct. They do not have any part of any play in creating the next movement of price scenario. I think all of this is predefined. I think absolutely they always plan to pull price down here. I think when you see this whole setup occur, this all looks like longs, right? That's the other part about it. They use time on this one. When this bar put in, the first thought that came straight to my head was, oh shit, we're going long, right? These are the words. Why? Because it's a big wick. It's just what I've seen in previous price action. In fact, we actually had something very similar. I think it was yesterday. Here it was. See this wick? It's a huge ass wick. Oh shit, we're going long, is what I saw about 3 p.m. And I thought to myself, well, maybe it's worth getting a long entry. And if I'd have got a long entry, sure enough, it might have worked out if I had have gotten low enough. But I've seen this happen as well, where look, they take the wick, they take the low. It's like a liquidity draw. So when I saw that, I went, oh shit, we're going long. But then I quickly remembered, and hold myself off a bit. This is a manipulation event. Think of this as a dealing range. Think of like which one's stronger. And so I'm basically saying that I think that this high of the dealing range was always going to hold, and this low of the dealing range was always going to get broken. That's my anticipation, and that's what I think was always pre-planned and premeditated. So based on that conversation, why don't we let this why don't we let this roll here on our charts and see if we can't watch this live, take profit, right? At the bottom here. I'm a few ticks below the low there, and I think that's okay. I think I should be all right there. I actually think we're coming into this buy primary range, which is when we're going to start seeing the reactions from whatever they want to do today, basically. So whether this will hold or we'll just work through it, or basically what I'm thinking of is a setup range will occur inside of here, as opposed to sort of within this kind of bit of price action. So we're just sort of letting price do what it needs to do just to sort of pull down into this area and hopeful that the dealing range holds. So let's watch it. We'll just speed this video up, and yeah, hopefully we can get a good few trades. Now, something else actually I've completely skipped over on this video, haven't even mentioned it, is my entries. I haven't even been just caught up, too caught up talking about the dealing range, right? Well, once you've got a dealing range, right? Once we know that we're in a dealing range and we kind of identified a very a weak low, for example, and a strong high. Let's just use that terminology. Once we've got that down, well, now we can start with confidence, start stacking orders, right? So the moment we get up into this, this primary range, I'm looking at orders and how I can get filled as many times as possible if I really, really, really do believe we're going down here. And so I was able to identify 3 trades, right? The first one was a dip into like above liquidity here and above liquidity here. I just did a sell stop on this one. So sell stop entry, nice and simple. Then we saw this range put in, and this was 3 things that happened. So you've got an order block creation, you've got IPA, inefficient price action, right, coming down here, and we took out a transitional order block. So those 3 things that went on, there was another transitional order block here. So I had 3 or 4 things, I guess you could say, here happen. And so the order block was the highest point, the last known area, which I expected price to hold at. Okay, so I had my order set, I believe it was 50% of that block, got tagged in and moved away. The next entry that occurred, and this is all just from my experience in the markets now over the few years, these entries aren't something I have premeditated or anything like that. This is just like, well, now I expect, them to come back to the transitional. For example, look at this. This was a wick. I spotted this wick right in here, right? Let's take off all the drawings. So I spot this wick right here as price pushed up, right? So that what's a wick? It's a range. It's a range. It's a period where price held. So a range where price held. They zipped up, did their mitigation, zipped down. So now we haven't at all mitigated it. So it's an unmitigated range. Then I see them touch right at the top of the range and initiate away. So I was thinking to myself, oh, that's a beautiful stack. We're stacking this transitional order block is likely to hold. And so let's turn our drawings back on. It's likely to hold. What happened? It held. Don't get me wrong, I was expecting wicks to pump through it, but I just was expecting price not to really want to close above it. And that's exactly what we got. Now, I wasn't expecting this whatsoever. Very lucky to hold on. Admittedly, not sure how. With my spreads, I'm not sure how on earth I held on there. But that's how I got into these 3 trades. This one was based on literally position, what was happening. We just had the mitigation and we were moving away. And I saw a transitional order block. So that was based on that one. This one was based on those 3 things, like I just said, the order block, the IPA, and the transitional order block. And this one was just a sell stop based on having come into the primary and taken liquidity. So 3 completely different, really, entry modals or entry methods, but hey, they worked out, or at least they're working out so far. So we'll see. Let's use a 15-second chart, and I'll force the chart to stay within view. So I'd say about there, right? So look, hopefully not long. I have to speed up the chart, but we'll stop talking here, and I'll come back at the conclusion. All right. Okay, and that is it. That's the conclusion. Dealing range held. It took a long time, but we were watching it and we understood everything that happened as it was moving down. Nothing was really worrying us. Yes, we had a reaction out of here. Something somewhat expected, but we were always expecting this high here to hold. Why? Because this range had completed. A to B had completed here. This was the next range, next dealing range, the internal dealing range that we were dealing with. And you could always say, well, look at the bottom. What have I mitigated? You know, again, it's basically a transitional biprimary that we couldn't activate. It's literally nothing, or it's down here, right? And so, as we're expecting our range to hold, typically we expect highs to hold and cell primaries. So it's kind of like they could have created this just for cause, and that's exactly what they did do in this instance. They used this range, the one I'm moving right now. They used this as cause liquidity, with this high being the high that we were expecting to hold. It sure enough did, and in that whole process, it created a cell primary, or several of them actually. One here, an internal one here before the activation. So, what do we expect right now? If price does want to zip up, we fully expect this range to have to at least hold for a movement down. But then we also do need to see what have we just mitigated. You know, if we break structure here, we do need to look then again, what the heck have we just mitigated? And we need to look all the way left and figure it out. So that's how I use dealing ranges, and that's how I've used them today quite successfully. And last thing to do is just to figure out our profits, right? And so we've got a 7.25 right here. So we'll just say 7R. Right here we've got a 9, right? So let's just round that to 10 since we had a little leftover change from the other one. And we'll round this one down. This one's 6.5, but we'll just call it 6R. So on the day, thanks to these 3 trades, we are what's that? 23, is it? Yeah, 23. 10 and 6 is 16. 4 makes it 20. 5, 6, 7. 23. So we got a 23R day, 3 trades from a really shitty basic move from a dealing range. No primary ranges involved except for the origin one right here. It was not a setup range. It was not my typical trading style. And so this is just something I've been analyzing lately and looking into is these sort of dealing ranges is what I'm calling them. And this is how I trade them or how I have successfully traded them today. And I think the key points are literally just on a pure price action perspective is look at your high, what has it mitigated? Look at your low, what has it mitigated? Couple all of this with your higher time frame analysis, and you're looking good. Right here, we're on the 1 hour. I don't think I even looked at the 1 hour with you guys on video, but we have this cell primary in here, stacks cause. We've had this monstrous reaction from down here, and guess what? This is the first part of internal liquidity that they've taken. We were honestly expecting them just to take this liquidity down here, which they targeted rather successfully. And if we were going to be long prices, I would expect us to have held in here and to initiate high prices. Now we know that we've gone and taken from another buy primary. We've bought from another buy primary below that range. So absolutely we can expect longs, but where do we expect longs right now? Only to over the internal liquidity. We've just grabbed it. We don't know if that's all they want to grab, but the next target is down here. So now that we've grabbed liquidity here, next target is to move down. So it coupled with the higher time frame analysis, and then we saw a dealing range, and then we spotted that the low was weak and the high was strong, and we were able to enter 3 trades and with varied R risk reward, and we did pretty good. All right, peace out. Catch you guys on the next one. Hope this had some benefit to you, and hope you're smashing it and crushing it, and your trading is going amazing. All right. Catch you on the next one. Bye bye.